Okay, okay, guys. Hopefully, you're all doing okay, right? Welcome back. Welcome back. So yesterday, I we talk about what we call liquidity trip, then shift in market structure. Uh, how do you know that this is liquidity trip? That's another question that I got from certain individuals. Like this move that happened yesterday, this one here, this move happened yesterday, okay? So this is what we call liquidity sweep. You see this relatively equal highs. As you all know, I told you about this relatively equal highs, which is what? This relatively equal highs, which is internal liquidity from this range high to this range low. Okay, this is what? This is internal liquidity. So if we break above this size, which means to say we are continuing to go to the upside. If we break below, as you can see, these candles, this 1, 2, 3, 4, 5, 6, 7, all these candle closes below this the liquidity which is above here. We only swept it, then we started what? To move to the lower side. Okay. So this is the only criteria that we are going to use for us to be able to take entries. If we are to take entries, if we are to take profitable entries, we must use this strategy for us to be able to take what? To take entries. So as we all know that we were doing what we call how to trade Asian sessions. Okay. So when you are trading Asian session, it's the same criteria that you are going to use to wait for what? For liquidity sweep. After liquidity sweep, then we then wait for shift in market structure. When we have got shift in market structure, that's where you are going to take your what? Your interest. That's the only way that you are going to take your what? Your interest. Okay. So we need to be able to see where is our liquidity points. As I said before, in this, let's say in this leg here, so this becomes a what? Our high, okay? Then this one becomes our low, okay? So in this leg here, where is our liquidity point? We have got this one here, okay? Then after this one, we have got also these ones here, okay? So if the market is going to come down here, okay? If the market is going to come down, like let's say your analysis, whatever you are doing, the type of analysis you are doing, you are saying that the market will come down here. This must be your first TP. Why? Because there is liquidity after this, because these are relatively equal lows, as you can see. This low and this low, they are relatively what? Equal. And we also have this one, which are relatively equal. So if the market is going to come down here, we're expecting to take out what? To take out this source of liquidity, also this one, and also going down. So what will you be waiting for in your entry criteria? You'll be waiting for liquidity sweep, then after liquidity sweep, then wait for shifting market structure. Then after shifting market structure, you're going to use everything that is possible for that area for that entry to be taken. Okay. So I want to talk about a little bit about London session, okay, Asian session. Let's say Asian session is somewhere. Asian session, as you said, it's 1900 hours to 00, right? So this is 1900 hours. Okay. And this is what? This is what I said. Right. So what are you going to use? You are going to use a lot of things for you to take an entry. Either first thing that you must look at is liquid receipt, then shift in market structure, right? After that, uh, what else are you going to use? Okay? What else are you going to use? You are going to use the first percent favor get after 1900 hours, which means anything which is first presented here, we are going to use it to end our trades going to that the upside. Okay. I will then do a certain demonstration using a live account on how to trade London Asian session. Okay. So in that scenario, at this point, this was yanking. This was junk. So you couldn't find a good entry there. Let's see if you can find a good entry somewhere else. This is 1900 hours, right? So as we go, yeah, this is 1900 hours. So where is our first presented probability? This will be 5 minutes, okay? So our first, let me go to 1 minute. Let me see where is my first presented probability thing that you can use even to for you to be able to check your interest. So this will be your first presented probability again. 1 minute. This one that you can use to take your entrance. Okay. So you can use this one. This is your first presented probability. This whole thing. If you want, you just use this one. Yeah. Inclusive of the imbalance, which is in. So you can easily use this one. As you can see how the candle is very reacted at this point. Then what are you going to target? You're just going to target 1:2 or 1:2, something like that. And it goes to the upside. Is it as it is going to right now? So you'll be in profit if you have entered yesterday. If you have entered yesterday, you'll be in what? In good profit. So, folks, as it is stands right now, so we are going to use first present of paper, as you can see. If you wanted to wait for liquidity sweep and shift in market structure, you was going to find it here. This will be shifted, your shift in market structure. Then the market came down here into this range. Then you was going to enter using this levels here for you to be able to what? To go up there. This was the first TP, second TP is Yuko. So I will continue teaching Asian session for a little while. Now I will come up with certain things that you want to know about Asian session. This is just the beginning of Asian session. So please be patient. I will be telling you more and more and more about the Asian session. So at this point, go and practice this to your demo accounts and see if it works. Okay. Try to look for the first presented value paper after 1900 hours. Okay. Then look for that one. Then after that one, you you want to see how the market reacts to the first presented value gap. Then it goes, and then come back with certain comments. Then I can see if you are in the right path or not. But this is it. This is how Asian session is like. So Till we meet again, folks, enjoy your day. Enjoy your day. Enjoy your day. Thank you very much.